Coming to you live with the insight you need from the financials and political capitals of the world to the heart of innovation. This is Opportunities to Consider with your host, author, speaker, and corporate strategist, Hunter Gaylor.
Hey everyone, and welcome to another episode of Markets Hunter. Today we're moving to our digital episode, which is also streaming live on Spotify. Today we are talking about Petvivo Holdings, where we're bringing in market analyst and former Goldman Sachs trader Joseph Salvani, where we will speak with him to get his take on the performance of the company, where they're going, and really do an in-depth dive. Once again, thank you for joining. Make sure you like and subscribe to all of our videos. Make sure you tune in on Twitter, YouTube, Facebook. We're everywhere. This is Markets Hunter, and this is CEO Talk. Today, we are joined with a new digital podcast version of our Markets Update, where we talk to CEOs and leadership and industry analysts. Today, we're going to be covering which is a really exciting stock, actually, Petvivo. Their stock symbol is PETV, and we're very excited to see what they're doing. A lot of stuff is being talked about, especially in the health and animal wellness space. And today, I am joined by a former Goldman Sachs analyst, Joseph Salvani. Joseph Salvani, welcome to the Markets Hunter program.
Hi, Hunter, and thank you for having me.
Not a problem. I know last time we did a video call, we had a little bit of technical difficulties, but that's okay. We're glad to have you back. I want to circle back, Joe, for the sake of today's conversation, and talk a little bit about some of the developments with the company Petvivo. Let's just start off a little bit for the audience and for the listeners on who you are and your background and what got you interested in particularly this company Petvivo.
When I graduated at a Columbia Business School in '81, I became the senior chemical analyst at Goldman Sachs. At that time, the chemical industry incorporated numerous other industries, namely pharmaceuticals and especially animal health. One of my companies, American Cyanamid, actually had a very big animal health division. After about 6 years, I left to become the third largest partner at Steinar Partners and managed about $500 million of money, mainly in chemicals and pharmaceuticals. And my love for specialty chemicals and pharmaceuticals has always gone on, and I spend most of my time there. So when I saw Petvivo, I became extremely interested. And do you want me to tell you what the reason is, or do you want wait for another question?
No, I think it would be very exciting for you to tell us what got you excited about the company.
Okay, so looking at this company, first off, I knew the CEO because I met him in the mid-90s when I was working on a company called Stratasys, which was the first rapid prototyping company. John saw that I was able to help Stratasys get attention, help it raise money, and as a result, when he was ready, he actually called me and said, "Take a look at my company." And I said, "Well, what are you doing?" And I said, "Well, I got this company, Petvivo, and we have a series of medical products that are going to the large and small animal industry." And I said, "Really? Would you tell me about it?" And he goes, "Well, the first product is a product called Spring. And this is a product that replaces and actually is an organically derived veterinarian product, veterinary medical device that actually originally started as a medical device, phase 2 medical device for Restylane, or a dermal filler." Interestingly enough, I happen to know a lot about that, which we'll get to a little bit later. So what happened is that then they were able to raise the money, go into the animal health industry, because once you have a phase 2 medical product by the FDA, you can go right into animal health without any further studies. And it took about 5 or 6 years, raised all the money, built out the manufacturing, and the first product, Spring, which is an organically derived product based upon collagen, heparin, and elastin, that once you inject it, creates a almost cartilage-like product that also acts like synovial fluid. It's actually like a lubricant, so it replaces the synovial fluid in the cartilage sac. So it actually acts as both things. In addition to that, they found it also seems to work with ligaments, but again, that's further. So they went out in the end of 2021, they launched the product. And then a year later, around the same time, they got MWI, which is the largest animal health distributor, to start marketing it for horses based upon the horse studies. And they've got six other studies coming out very soon.
Well,
so
that's
I just thought the stock was very cheap. Anyway.
No, that's fascinating. And two questions off of that is the spring product that they have. If you could maybe break this down and say layman terms for our listeners and why you believe that this could potentially be some sort of blockbuster type technology.
Well, very, very simply, cartilage basically has synovial fluid, which is a lubricant in the middle of it. You think of cartilages as your discs or inside your knee or your elbow. These are the reasons why we're able to move so easily. When you get arthritis, the synovial fluid usually is weakened, or it's something wrong with it, or there's a leak, and the disc it leaks out, and the disc collapses, and that's when you get bone on bone. That's when you get the nerve pain. So imagine having a horse that's always running, or a dog that's always moving, and then all of a sudden you get your disc isn't working anymore. The knee doesn't have the synovial fluid. The problem is, like they used to treat it with hyaluronic acid, which replaces the synovial fluid. But if you inject it into the cartilage that already has a hole, it's going to leak out. The beautiful thing about Spring is when you inject it as a liquid, it formulates, it granulizes, and becomes a sponge-like substance. And that sponge-like substance actually acts like a lubricant also, so it doesn't need the synovial fluid. So that's a very, very important fact. And they're finding, even though it's supposed to be done every year, they're finding it could last 2 to 3 years. And there isn't anything out there that treats the disease instead of just treating the symptoms. Okay, hyaluronic acid treats the symptoms. NSAIDs, which you know are non-steroidal anti-inflammatories, like naproxen, or what we know is Advil. All right, what they do is they actually take away the pain, but also cause further damage to the joint. And there's only another product out there, which is a synthetic lubricant for horses. It's based on polyacrylamide. And the problem with that is that about 10% of the time, the body seals it off and you can't get it all out. So therefore, the horse or the dog actually locks up their knee. So you don't have that problem with Spring. So that's what's so good about this product.
With the product being so good, what is their competition? What does the landscape look like for a similar product, or is there one?
The only competition for this type of thing is a synthetic lubricant called polyacrylamide, which basically is marketed as Noltrex and one other. That's a Russian-derived product and a U.S. company in the market. So the problem you have with that is that in the racing associations, as of January 1, is basically telling you that if you put it in the horse 6 months later, you can't race your horse for 6 months. So you might as well just take your horse and not run him. If you use the organically derived veterinary medical device called Spring, you don't have that problem. And also, like I told you, there is no 10% of the time it locks up on Noltrex or the other product. And like I said, you could also treat it with anti-inflammatories, but that doesn't solve the problem. What we're finding with the horses, and is now in dogs that they've been using it on, is that within 3 days to a week, the dog and the horse are running around. Matter of fact, a lot of horses are actually being found that they can claim the horse and then run and win races. So that really is the only product out there for this. And so it's got plenty of patents, and it's got the largest distributor with over 4,000 offices marketing it. So when you look at it, it's very difficult to see how this landscape isn't all theirs. And it's a large market, Hunter. You're talking about, there are 14 million horses, of which 70% are pets. There's about 65 million dogs. There's about 55 to 60 million cats. They're going to be coming out with a feline study mid-year. What's really interesting is, whereas they come out with a lameness study for osteoarthritis for horses already, and that's what's been marketed about 90% of their sales. What we're finding is on March 15th, there's going to be a peer-reviewed study that they've done, and I'm very sure it's going to come out really well because otherwise it wouldn't make it the centerpiece of this veterinarian of this whole meeting. And so what we're going to find is that it's going to probably show that it's doing the same thing for the horses. It works really well for osteoarthritis. And all the anecdotal evidence we see from social media where people have been using the product that the vets have prescribed for dogs, and they're bouncing around like young puppies again, that you're going to get a great deal of attention. So if that's the case, you're going to see a very big pickup, because it's really hard for me to believe that with close to over 120 million animals over the next couple of years that'll have impact from this, that you're not going to get at least 1 million injections a year sometime in the next 2 years. If that's the case, you're talking about a product that's well over 200 million in sales, and you're talking 90% margins. I mean, pharmaceutical grade margins.
So from a market perspective, when you look at the real opportunity of scalability for this company, the fact that you had mentioned earlier that the product in the animal world, their distribution partner is Amerisource Bergen's MWI unit. How big of a role are they going to play in this rollout?
Well, they're a major role, because basically the company has hired seasoned salesmen to assist MWI. But MWI has 4,000 offices in the U.S. and covers almost well over 90% of all the vets. So, and they're investing a significant amount of time in training the vets to how to inject the product, and they're going to be spending an awful lot of time to help these 80% of the small animal vets do injections, which right now they don't. This product enables the small animal vet to inject the dog with minimal, or the cat with minimal anesthesia, using a local, and it doesn't have to require the dog to stay overnight. That's the reason why only 20% of vets do injections, because they really, in general, don't want to keep the dog overnight. So now they'll be able to do that, increase their income. Now, if you have a dog that basically you can tell is in pain or it's lame, and obviously you love your dog or you love your cat, and they're in pain, one of the things that you have a choice is if it's too much, unfortunately, you might have to put the animal down, which costs you $200 to $300, or you go spend $6,000 for a knee surgery or joint surgery. For $600, you end up getting your dog acting like a puppy again. Now, I think you're going to find most people are going to go for that. In addition, there's a huge amount of growing use of pet insurance, and this product is covered by pet insurance. So it would be hard to say, let's just say osteoarthritis in dogs is about 20%. So it's about between 12 and 13 million dogs that have it. It'd be hard not to imagine they can't do at least 1 million injections among all 3 animal types. My gut is they'll probably do much more than that. So therefore, sometime over the next 2 to 4 years, this product could end up being a $200 to $400 million a year product for this company. And like I said before, you have 90% margins. And the beauty that this company has done, that John has done excellently, is that they only have 10.6 million shares. So, the leverage on earnings per share from this product is enormous. So if in 2025 you get, let's say that by the end of 2025, you're running a quarter that could be running at $100 million rate, you'll be running at over close to a $10 a share earnings rate, and maybe double that the year after. So, if that's the case, you're talking about a company that could easily be a $200 to $400 a share product. I mean, $200 to $400 a share company over the next 2 to 3 years.
So do you feel that with the product that started both in the animals, dogs, the cat study that's coming out, and obviously the equestrian community, Can you explain the potential human uses of this since it's phase 2 FDA classified medical device? Can you speak a little bit to that from your market experience?
Well, I mean, the product originally was developed to be a dermal filler to compete with Restylane. I happen to know a lot about Restylane because I was one of the original founding investors of Medicis, and I helped Jonah Shacknai, the founder and the CEO for the longest period of time, to grow the company. This product isn't going to go into dermal fillers. There's about 136 dogs or animals that were used in the, there were 136 humans in that test, sorry about that, and got through to phase 2, and it was declared a medical device. I think all they have to do is a PMA, and which probably takes less than $5 million in less than a year and a half. And you can see this thing on the market, not from them. They have no desire to do it on their own, but I expect that the company will probably be approached because of the success of spraying in animals, because as more and more of the animals use it, there's very limited difference between an animal joint and or human joints and the way the product works. Since the manufacturing facility is made according to human FDA GMP compliant grade as well, I think that you're going to find that it'll be very easy for someone to cut a deal with them. So, but first, let's just look at the valuation hunt based on animals.
Sure.
Like I said, there's another, say, 15 other products. There's a urinary incontinence product that'll be out next year that could be also a blockbuster product, not to count the other ones that are coming. So as the world begins to see this product on social media, because people are going to post that their dogs are acting young again and everybody's happy, just like we saw this doctor's video that his dog all of a sudden is running all over again, this older dog. There was another video that basically on a golden lab, that the lab is about 11 years old, and they bought a young puppy, the owners bought a young puppy for it, and they didn't, the older dog didn't want anything to do with the puppy. When they gave the dog Spring, all of a sudden it was running around playing with the puppy. So you couldn't, these are the types of things that make pet owners extremely happy, and makes anybody happy, but it makes them very happy. So when people start seeing this on social media, it's going to start generating a lot of demand for the product, and people are going to find out about it. It seems like interesting. Every time somebody finds out that their horse does better, they end up buying stock. So what's going to happen, I believe, is that this is going to continue to go on. There's only 10.6 million shares, most of it owned by the insiders. There's only a little less than 7 million shares in the DTC system. I think there's at least a 2 million share sleeping naked short that have been trying to hold the stock down below 3. Yesterday, for the last several days, we've been over 3. Yesterday, it broke through 3 with authority. I believe once it breaks through 3, this sleeping short, which is going to have to follow its algorithms and start covering. I think the stock has a big run ahead of it because there's more and more people find out about it. Now, add to the fact that somewhere around mid-year or later, I believe someone will probably come to them to try and want to do something to do PMA for the humans. This product in humans is even bigger than the market size you're going after. I mean, I Googled the other day, and they said that the knee lubrication market in the world is $11 billion. Now,
that's massive.
I was involved with a company called Biomatrix, and I actually did very well with it. That company produced hyaluronic acid. It's called Synvisc. It's now progressed to Synvisc 1 after Biomatrix got taken off. In 2017, Synvisc 1 did, the last time I saw what the numbers were, $400 million a year. This is significantly better than hyaluronic acid, as I explained earlier, because it doesn't, hyaluronic acid still leaks out of the hole in the cartilage. Whereas this one fills in, there's no liquid to come out because the liquid turns into the spongy material we talked about. And by the way, if you needed to take it out, you could take it out 100%, where you don't have that problem with polyacrylamide. Where polyacrylamide can stay in. So my point here is that hidden inside this company, which is dramatically undervalued due to its main business, is a business that might even be bigger. So my opinion is that the stock, which is trading a little above 3 right now, all right, is going to become probably the best performing stock on NASDAQ. The stock is on NASDAQ. And then probably for this year and next year.
Where do you see, Joe, where do you see, given what you forecasted, let's just focus on 2023, where do you see it in 6 months, and then give us your 1 year and 2 year estimates?
Well, I mean, I think that you're going to see a very quick move as we get closer to this March 15th date, talking about the dogs. And he's got a series of other studies coming out. I think the stock could easily, by the end of the year, be trading between 30 and 40 or higher. I think within a year's period of time, it could approach, the 100 to 200 range. And in 2 or 3 years' time, like I said before, it could be a $300 to $400 million product. That's not counting any value to what they could do with the human side. I mean, I wouldn't be surprised, as John is a very adept CEO, a smart person who actually knows the way around Wall Street, to let the shareholders benefit by, somehow or another creating a subsidiary and teaming up with a big pharma company or a medical device company, and then letting the shareholders benefit through a spin out at some point over the next 2 3 years. I mean, this company is dramatically undervalued. I don't know how many times I have to say it, but it is. I haven't seen any holes in this company. The only near-term things he has to deal with is he probably needs to raise $2 million a quarter, which he's always raised from his own people. So I don't think you're going to see anything. He's always done. He's got an active S3 where he does a at-the-market deal with his big clients and his big shareholders. So you're not going to see any diluted deals. You're not going to see any shareholders that don't believe in the company. So he's got all the elements that people look for when they want to find a home run stock, and that's what this is.
Well, no, it definitely sounds like it, and I think it's great to bring in, like we do here on Markets Hunter, the analysts that have significant experience on Wall Street to just really kind of just give us the cold hard facts of the company, good, bad, or indifferent. But it seems to me that based on their developments, based on everything that they have and where you see it going, this is definitely something that everyone should be looking at. And Joe, is there any final thoughts that you have on the company?
Yeah, I just, I think that the stock price is going to continue to reflect these great success the spring product is going to be having as more and more people post videos of their horses or dogs, and people begin to find out about it. All it takes is for one fund, a company of this size, to blow open the valuation. Company right now at $3.20, maybe, is trading at below it, mid 30s valuation. That's crazy valuation. It should be 10 times higher than that at some point here in the future. So I think when you get 2 or 3 funds trying to buy 5% positions, you get a valuation drift up, and I think you're going to see that here.
Well, thank you so much, Joe, and we appreciate the analyst coverage. We'll definitely have to have you back to keep following that company and perhaps get your take on some other companies as well. But anyway, I appreciate you joining the program today. That's definitely been an exciting ride to get your industry expertise. And so for everyone listening, I hope you've enjoyed this journey that and insight, this valuable insight that we've gained into the world of capital markets, especially with Petvivo. Again, their stock symbol is PETV, that's Petvivo. You can also go check out their website. You can continue to follow us. Follow us on Twitter. This will be posted not just on our Twitter, but also on Spotify. So you'll be able to listen to it live during your drive time. For all you people that are in the car and want something interesting to listen to, definitely check this out. And if you have pets, I highly encourage you to check them out on social. They have Petvivo Cares is their tagline. And their hashtags, make sure you use hashtag Petvivo, $PETV to follow. And as always, thank you so much for joining us on another episode of Markets Hunter. Joe, thanks so much for joining us.
No problem. Thank you very much. And I'm glad that you also have John on the show from time to time. He's really a good CEO. He's an excellent CEO.
He's an excellent CEO, and we actually had the chance to speak with his director of national sales, which is great. He comes from a great company as well. So but lots of exciting stuff to come. We're definitely going to keep this company in our sights. So thank you so much, Shell.
Thanks, Hunter. Bye.
Bye-bye.